Welcome back to the Williams Real Estate Channel. I'm your host, Geordie Williams, and today we are discussing the ripple effect when it comes to the Australian property market. Now, the ripple effect, I'll start off by explaining it with a simple sketch. So here's Australia. The market starts, I'll take you through a full market cycle based off the 18-year land cycle, but the market starts in Melbourne based off history. And then Melbourne and Sydney lead the first half of the 18-year land cycle, and then they have a spillover effect into the regions. So Bendigo, Ballarat, Geelong, and then say Sydney then spills over into the Central Coast, which then spills over into the Hunter Valley. And as people get priced out of the markets they grew up in, they can't then afford to live. They then look for the next best, more affordable place to live. And hence it has a ripple effect as people continue to get priced out, and then prices continue to keep rising out into the regions. Once then Sydney and Melbourne have had a good run, they'll have a spillover effect into the regional New South Wales and regional Victoria, their respective regions. Then there will be a further spillover effect where there's more domestic migration from Sydney and Melbourne. So Melbourne people will start going to Brizzy, even Sydney moving up to Brisbane, and then there'll be a spillover effect from Brisbane into regional Queensland, so out near Toowoomba, Warwick, Dalby, even further north. And then people will then even start heading across to Perth. Perth will then have a good run, and then there'll be a spillover effect into the regions of WA, and the same goes for Adelaide in the second half of the cycle. People will start spilling out of the more expensive metros and regions into the more affordable areas. And then there's a big ripple effect out to the more affordable metros, Brisbane, Perth, Adelaide, and then their respective regions. This is all based on the 18-year land cycle. First half of this current cycle started 4 years post the GFC. So as you may recall, the GFC in 2007 market topped out. We then went through the 2008-9 GFC, the land-driven downturn. The market then recovered from 2009, 10, 11, 12, lead up to through the recovery, the first half of the cycle. That's when Sydney, Melbourne perform in the first half of the cycle. And then there's the spillover effect from Sydney and Melbourne into their respective large regional towns within the state. And then regional Victoria, regional New South Wales then start to perform, or did start to perform, after Sydney and Melbourne did. And then those markets topped out prior to the mid-cycle slowdown around 2019 to 2022. And then there was a spillover effect from New South Wales and Victoria into the more affordable metros, Brisbane, Perth, Adelaide. And then that's where we are today in the land boom in the second half of the 18-year land cycle, where we see Brisbane, Perth, Adelaide now performing very well and their respective regions, large regional towns. And we are now positioned on the blue marker, just coming through the back end of obviously 2024 and entering soon to enter 2025, and a similar point of the cycle. If you recall, the previous cycle would be 2004 to 2005 is where we sit in a similar point of the cycle. So based off that information, hold that train of thought. I'll now start to show you 20 years of sales data, and I'll take you through the current cycle, which commenced the recovery around 2009, 2 or 3 years post the GFC, and we'll start from 2009 to where we are today, and then where we are potentially heading forward over the next couple of years. So Melbourne, We are here in 2024, but if we take it back to the previous cycle, Melbourne in 2004, 2005 was stagnant, flat for a year or two until around 2007, 2008, where it then became the market performer. And then as of 2008, 9, in the first half recovery after the GFC, Melbourne then performed very strongly up until around 2018. Similar story for Sydney. As you know, we're here on this side of the chart, 2024. Equivalent point in time is 2004, 2005. I'm expecting Sydney to soften next year based off history, but it is also starting to soften now on the ground. There's a lot more buyers retracting, a lot more listings coming up, and a lot more opportunity in deals. And we're expecting the next year or two to soften based off history, as what happened in 2005 and 6, and then the market bottomed out in 2007. Come 2008, Sydney was away at the races as a leading market for a good solid 10 years up until 2017, 2018, say call it 2017. And then we saw a spillover effect. So this is Victoria, as Melbourne topped out around 2018. The spillover effect went out into regional Victoria around 2018, and then we saw a solid continuous run up until 2022. Same goes for regional New South Wales, as Sydney topped out around 2017, 2018. People then decentralized from Sydney and Melbourne, moved out into the regions in 2018, and we had the big regional boom lead up until around 2021. And then those markets became unaffordable. People looked elsewhere, started going interstate to Brisbane. So Brisbane in the first half of the cycle was very stagnant and flat, but come 2021, 2022, it was away at the races again. 2022, 2023, regional Queensland, people then decentralized out of Brisbane and headed out into regional Queensland. And then now we're seeing a solid run, 2022, 2023, 2024. Perth, obviously it's very mainstream now. People are plowing into Perth in 2022, 23, 24. And in Adelaide, 2022, 2023, and 2024. So if we just take it back now to where we're potentially heading moving forward. So based off history, as I said before, we are in 2004, 2005 equivalent, and we've got a couple more years before the market is due to top out in 2026. So if we take back now to where we are heading potentially in the future, if we look at what happened in 2005 on these same charts, that is where we are potentially heading. So for Melbourne, 2005, stagnant, but as of next year, it will become potentially the leading market for capital growth. Sydney's due to soften in next year based off history, and then come 2028, 2027, 2028, it'll then be again the leading market. Regional Victoria is now starting to soften. So the ripple effect is now coming back from the regions now in regional Victoria. And we're seeing this. The sales listings are rising, days on market are rising, the prices are softening based off this data. It's continued to be subdued for the next, say, 4 or 5 years. Same goes for regional New South Wales. As it's topped out now, it's starting its protracted period of flat to negative growth, as what happened in 2005 and 2006 onwards. And it wasn't until 2013, 14 where it then started to get capital growth again, as the ripple effect is now coming back from the regions in New South Wales and in regional Victoria. Brisbane has still got a few more years to run, probably two or 3 years before it will then top out and then go through a protracted period where then the ripple effect will start to come back around 2028, 2029. Regional Queensland has still got a few more strong years ahead of it before it will then probably top out around 2028, 2029, and then the ripple effect will then come back from the regions and slow all the way back down in the first half of the next cycle. Same goes for Perth. There's probably another year of solid growth, but then the ripple effect will then come back and be more subdued for a protracted period of time, and the ripple effect will come back to Melbourne. Same goes for Adelaide. I think Adelaide's more or less at the top, maybe another year of 15, 20% growth, but then it'll top out and then the ripple effect will then come back to the main leading economies in Australia being Melbourne and Sydney. So this is why we are now selling our seeds in Sydney and Melbourne. Yes, it may be scary. Yes, they may be getting a lot of negative media at the moment because what has been over the last couple of years of subdued growth. But when you buy a property, you're buying the future growth. You're not buying what has been. That's history. So this is why we like to use the 18-year land cycle as a framework, study history, but then also study the sales data in multiple markets with multiple assets, multiple suburbs, and work out where is the best market to put our money and what type of asset, if it's a unit, villa, townhouse, house, block of units for the coming years ahead. And I believe Melbourne is definitely number one, second to that Sydney, and we are no longer looking to invest for the next couple of years in definitely not, I guess, New South Wales, Victoria. They're now starting to soften. Personally, I'm looking to sell out next year in New South Wales to move money down into Melbourne. And we're not advising any clients to buy in Adelaide or South Australia, Brisbane, Queensland, Perth or WA anymore. Yes, you will get growth, but it's limited. At some point, those markets will top out and then start to cool and go through a protracted period of stagnant to negative growth as the ripple effect will come back to the main markets of Sydney and Melbourne, which will be the market leaders in the next 18-year land cycle, which will commence around 2027 and onwards. So that's why we're plowing into Melbourne and Sydney, buying up all the bargains while they're cheap, because it won't be long before the mainstream catches on, and then we'll be away at the races again. So if you need help, get in touch, send me an email, leave a comment, like, subscribe, shoot this information to anyone you believe it would be of value to. Remember, as always, this is by no means financial advice, as I'm not a financial advisor. This is just general information, content, and cannot be taken for any advice, as I don't know your personal circumstances. However, be wary of the spruikers out there. In the last couple of years of the land boom, historically, lots of spruikers pop up, which we're now seeing in the marketplace. I guess every time you scrolling, you can see a new spruiker pushing a certain product in a certain market. If they're not across the 18-year land cycle, then they well may get you burnt when the market turns. So make sure you do your research, do your homework, study the markets, make sure that you're making the right decision and not making an investment decision of what has been historically, because what has been happening in the past in the market is not guaranteed of what's going to happen in the future. Thanks for watching, and I'll catch you next time.